This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with their closing grain and livestock comments. Corn market today up 1.5. The bean market down 5.5. Minneapolis wheat down 3 3/4. Feeder cattle down 3.80. Live cattle down $1, and hogs right now up about 32.5. As you look to the grain markets today, the dollar index was kind of choppy, mixed here to start the day, and then kind of worked its way lower, and that got the markets revved up here a little bit, but then we couldn't hold anything together, faded back down, and then found ourselves on the weaker side of the trade for much of the day, for beans and wheat particularly. The corn market tried to hold strength all day, was able to muster up that 1.5 cent close. As we look to really the key drivers here, we've got a crop report tomorrow. We will be watching that closely at 11 o'clock. Really not a lot of expectation for change out of that report. This is very much a demand-based focused report. So we're looking for slight increases in carryout in corn and wheat and a little bit of decline in soybeans, but nothing really that should change the game unless we get a surprise from USDA. The other big factor here, when we look to Thursday, Argentina will be out here on the 10th with change in leadership, and that could potentially bring a reduction or elimination, which is forecasted right now, of corn and wheat taxes versus beans, where they'll reduce 5%. So we'll be watching those two things the next 2 days. Those are going to really be the drivers alongside that dollar index, but as we see it, very much a range trade. Don't read too much into the big up and big down here in these markets right now. We really think we're kind of stuck in this range in corn between this 365, 370 mark for the downside counts, and then to the upside 385 to 390. Looking at the bean range, we're looking at around this 865 as kind of key support here. I don't think we need to go all the way down and test the lows, but that may depend on USDA's report tomorrow. Upside counts around that $9 area will remain good selling targets in our opinion. And as for the wheat market, we're on the lower end of the range. We really haven't done much to begin with. El Nino going to be a big factor there. If you look into the grains in general, kind of the hot market right now is the bean oil market, and that's a market that could expand and help the bean market out here over the course of time. When you look at the meat market today, the feeder cattle specifically, very weak day. We tried to recover a little bit here, but we're just not finding anything to grab onto. Cutouts, while they're at least stabilizing, we're not seeing any extension. We are coming into a seasonal time frame here that we do see some support for the feeder cattle, live cattle contract from now till Christmas. We'll see if some of those seasonals help us out, or at least give us some opportunity to see a rally in the near term. As for the hog market, a little bit firmer tone, stuck in this range. Really don't see us breaking outside this range to the upside or downside. So looking for more of a choppy tone. Cutouts are starting to firm a little bit, and we're looking at seasonal slaughter pace that should decline here over the next week to 2 weeks. But getting outside of that $60 mark to the top side, 61, going to be a little tough for the nearby contracts, and the deferred contracts up into that $78 mark. Pretty good selling opportunity out there in June. So kind of keep an eye on those ranges, and we'll take her from there. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation.